Alright, yo. So I actually recorded this, this whole video with actual audio because my audio wasn't plugged in or something for some reason. I don't know. But I'm gonna do a trade recap right now. Got a 125 risk to reward, actually beautiful trade. I'm gonna show right here. There's actually another trade, but you'll see that other trade in the trade video without the sound, which I'll put at the end of this video. If you want to watch it, I'll just go over this trade. The other one was a win as well, and we had 2 losses. We had this isn't a real loss, but still 1, 2, 3 losses, and we had 1, 2, 3 losses wins. But those wins were sorry. I go 1, 2, 3 losses, and 1, 2, 3, 4, 5 wins, which were way bigger than the losses. So I actually took 1, 2, 3, 4, 5, 6, 7, 8 trades today. Wait, oh no, this is from yesterday. All right, so 1, 2, 3, 4, 7 trades and 2 losses. So I actually took 7 trades and only had 2 losses today. That's pretty cool, actually. I didn't know that. But trade for the day. This white line is New York midnight market open. And we had FOMC today, big news, like the biggest news there is. 8 times a year now. This year or now today was one of those 8 times. So at this buy side liquidity right here. So this is all buy side liquidity, but let's go right here. Like the 1 hour, we still hold this like order block, rejection of this portfolio gap. We went lower, had this 15-minute like market structure shift right here. Actually took this other trade like right here. I think this was this retrace, which I took. 15-minute market structure shift. We got a portfolio gap right here. Yeah, that's actually a trade right there. But yeah, we had lower. We grabbed this liquidity. Move to the upside, and I still see that we hold this right here. We had lower, we hold this right here, we had lower. Yeah, so market still was going lower, and we had FOMC dropping right here. I actually took another trade right here, which was like equilibrium and OTE of this level, which was with standard deviation as well, but I'll just leave that, only this trade. So we take out a full FOMC liquidity right here. We took this liquidity to the upside. This is actually where we begin. So we actually have a SMT right here. I have the E-mini right here of the S&P. So ES didn't sweep this high, but on NQ it did sweep the high. So I was waiting, saw this big portfolio gap to the upside, and I saw that we had this line right here. I don't even know what this line is actually. What is this line even? Okay. Alright, so it's like a 12-hour portfolio gap fill, which still needs to this the portfolio gap. Yeah, I know, but from here we didn't fill this yet, so I had this marked out, and then we had this liquidity right here that lines up with the portfolio gap. And what else is we had? So that was like the first TP. That should have been my first TP, but my first TP was actually this right here. But I'll just move that later. So right there. And then I saw this accumulation as well. And why this random accumulation I will show now. So we had this push to the upside on and filling this imbalance from FOMC. And then basically all this move right here, because we got a market structure shift I'll show later. This whole move right here, or maybe I should do it later, but this whole move right here, from this low to this low, which I marked out already, is right here. Let's unlock it. So right here, from this price high to this price low, you have standard deviation right here, -1 level, comes in line perfectly with this low that I marked out. So let's remove this back. As you can see, comes in line perfectly. -2 and -2.5. I didn't have this at TPs. Well, actually, no, I didn't even have that at STP apparently. So that oh wait, I did. Sorry. that came perfectly in line with this accumulation on like the 1 hour, which then came perfectly in line with this 2.5 level. So it all fits perfectly, right? And my bias was already going to these lows because there's a lot of liquidity right there. And then this standard deviation to the tick, like actually to the tick right here. All right, not to the tick on this one, but right here on this one to the tick. Like drawn liquidity was very clear to me. And then right here, which was actually the first confluence later on added standard deviation. And right here, you can't really see it. Standard deviation is, damn. Oh yeah, from 10 minutes to right here. Yeah, it doesn't really matter if you just have this move from right here to right there. So from right here, maybe this is like the same. It isn't the same, but right here, standard deviation is more clear on this. And on 10 minutes, you have the same one as well. And it's just, I don't know. But standard deviation perfectly right there. We got this market structure shift to the downside right here. With this swing low, we break this swing low. We get our market structure shift. You have this nice reversal gap right here. I took my entry perfectly in this, and I had my first stop above here. I got stopped out at like, what is this? 1, 2, like 2 points. I got stopped out at like 2 points. I had this whole thing set up right here, but got stopped out. I later on went into the trade again with these candles to the upside right here. So I had my enter at the trade right when we came into this reversal gap again. Now I have my stop loss at this high because we could still come above this high, maybe sweep that, I don't know. But that's where I have my stop loss. Then my first TP went all the way to this low right here. And later on I set a stop, so sell stop right here. We went through this, sell stop got activated. I'm in 2 contracts right here. I move my stop to this high right here, because this should now act as the order block. Reactive this for value gap. We had even lower. And then we came into this range. We didn't sweep this low, and still I didn't want to take anything off right here. Even though there's like a liquidity pool right here, and we didn't even sweep this, but I didn't want to take anything off here. I just wanted to take it off at the -1 level. So we got a market shift to the downside right here again. We got accumulation and this market shift to the downside, breaking this swing low again. Then I added in another contract right here. So at this point I'm in 3 contracts right here. And then my overall stop loss got like moved to, I don't know, right here. And this was my first TP, and this risk reward looks really bad, but my risk reward was like, I don't know, really good. It was like I got filled like right here, or actually like right here, and then my stop was right here. But when I moved, when I got hit right here, my stop loss went like right there, but like my fill was right there. So this is like my break even point right here. That's above where I wanted to be my stop loss at. So there's still profit in this range. And we had lower. I still had this extended. We hit first TP right here. I took off 2 contracts right here. Then we had lower. We rebalanced right here. Take out this swing high and reacted off this order block. So it acted as an order block and a swing high. Took out the swing high as liquidity. Then had it lower. Actually wanted to take another contract off right here, but I was hesitating. Didn't know for sure. This is actually a market structure shift, but because this candle was like a hammer to the upside, which was saying bullish right here, this candle, that's why I didn't take another contract in right here, but I could have. So as you can see, went straight down from there. Then I had another one which I set right here. I set my limit offer right here if it came into that again, but it didn't. Had this big push to the downside. Had like equilibrium set from this point, swing high to this swing low. This equilibrium had like a limit offer right here, but it went from like right here to my TP, second TP, and I'm fully out this trade. Remove the limit order, sell limit order, and we're here right now. So market closed perfectly, perfectly is actually closing like right now. like it's closed right now. But yeah, still in the kill zone. So we had like a lot of confidence. We had everything like one SMT midnight open. We trade above the midnight open. That's 2. We take out liquidity. Right? Oh, that's SMT. Yeah, that's 2. We have this market structure shift. That's 3. We have this four-way gap. That's 4. We have standard deviation. That's 5. What else do we have? We are in the kill zone. That's 6. That's like everything you can have and everything that ICT teached in ICT 2022 mentorship. And that's like all these things added together, and that's how you get this perfect trade. Like, look at this. Like, this is perfect market order flow, and it's just beautiful right here. So that was the whole trade, not from the day, but this is the whole trade, like the big trade I actually took. But yeah, that's everything. If you want to see like the whole live trade, it isn't like the full market open live trade. Actually wanted to make the video like shorter and actually record the trades, the only trades that I take, and then not like the live candle forming. But still, yeah, if you want to watch that, that's at the end of this video. You can watch that. But yeah, I'll see you guys tomorrow again. Bye.